investments in oil and gas wells as well. For those that have very high income, but from employment sources, it's very difficult. It's very difficult for a number of reasons. You could take deductions and generate deductions through real estate. But to qualify for those, you need to be a real estate professional. And to qualify as a real estate professional, you need to develop a substantial amount of time to real estate. And if you're a highly paid employee, chances are you won't be able to do so. So there might or may not be limited in your ability to use real estate as one of the vehicles. There may be other things that you can use. Oil and gas, for example. Oil and gas investments have a tax preference in that when you invest in an oil and gas, but we're not talking about royalties or stock in an oil and gas company, but a direct investment in a group of oil and gas wells. And there's a lot of folks in Texas that promote direct investments. Is what's called a working interest in an oil and gas well. And usually you don't invest in one, you invest in a portfolio of actual wells. But you actually, it's like owning real estate. You actually own through a different structures that directly own the well. And for every dollar you invest, as a rule of thumb, this is not a general rule, it's a rule of thumb, about 70 cents of that investment is tax deductible. So if you're an employee that you made $1 million, you invest $700,000 in an oil and gas well, your income will be reduced to about $300,000. So you pay tax only on $300,000, not on your $1 million.